All right, at this time I'd like to bring up Pacific Business Funding. She's going to be introducing her partner in life. Okay, come on, Lizel.
All right, well, my name is Lizel, and this is Jason. We are the Zegers, and we own and run Pacific Business Funding. Basically, we get money for businesses. We've got money on the table. You can take some if you want. Today, we are talking about from grind to glory, breaking the chains of debt to maximize kingdom impact. So my question is, who in here wants to increase your kingdom impact and your impact in the world? Ooh, very nice. Okay, how many of you want to do that through owning a business? Very nice. Okay, so for those of you who do have a business, I just want to know who in here in the room, what industry you're in. So just go ahead and shout it out. What industry is your business in?
Healthcare.
Healthcare? Okay. You mentioned jewelry, right? Yes, I know. I know we have financial coaching. We got coffee in the back, right? Awesome. So it doesn't matter what industry you're in. We're all experiencing this thing called the grind, right? Like hustle and grind, rise and grind, all these things, right? And usually when it's a mom and pop shop, or you're a solopreneur, or you're wearing too many hats, right? Maybe you're a parent too, and you're also doing this thing on the side. It really doesn't matter. But God didn't create us to grind, did He? No. On the next slide, He actually loved us. So, next slide. Yes, God loves you, and He wants the best for you, right? He created us to be the dressers and the keepers of His beautiful land, right? And then to do it in relationship with Him, right? This is why He put us on this earth. And then on the next slide in the Bible, from the book of Romans, chapter 8, verse 28, it says, "And we know that for those who love God, all things work together for good, for those who are called according to His purpose." And personally, I believe that as Christians in business, we are here to add value to the place that we live, work, and play, right? We are here to shine a light as we solve problems and add and be in service to our community, right? Amen? All right, and so also just like God takes care of us, we must take care of and be stewards for what He gives us. So on that note, I'm going to have you guys participate, and you're going to read this next slide aloud with me. Ready to go. God is my source. He is the owner, and I am His money manager. I see some giggles, that's good, right? Jason and I actually took a class called Wealth with God at our church, and we learned that concept from our pastors. And we just took that, and we are practicing it every single day with every single dollar and every single deal that God gives us. And we're teaching our kids the same thing too. So if you didn't take a picture of it, go ahead and take it. We actually have a little, it's printed out and it's in our wallets. So every time we have our credit card or we're pulling out our cash, we're seeing this, and we know that there's always more where this came from. There's always more. And so, so keep this in mind as Jason, he's the president of Pacific Business Funding, keep that in mind as he shares how we get to help businesses just like yours step more into your purpose and your mission and maximize the impact you have in your community. Let's welcome Jason.
Thank you. So just real quick, by show of hands, how many business owners do we have in the building right now? Cool. And then how many else want to start a business? Awesome. Cool. All right, you guys are in the right spot. So today I'm going to be talking about basically financing for businesses. That's what we do. A little bit of background on myself. I've been in the finance industry helping small businesses for the last 20 years. I started when I was in college, started with equipment financing. Over the years, my clients used to ask me, well, you did this financing for the equipment, can you get me a line of credit? Can you get me commercial real estate? Can you get me working capital? And so over the years, I've kind of learned how to do A to Z in the finance world. So essentially what I was able to understand is how the banks work, how the lenders work, and we craft the deal so that it makes sense to the bank and they're gonna approve you, right? And so that's kind of what we do. You can go to the next slide. So our mission is really to bring resources to small business owners, especially out here in Hawaii. Originally we came from the mainland 7 years ago, but I've been coming here since I was 5 years old. I feel like this is my home now. And Hawaii is very under-resourced when it comes to businesses because we're literally on a rock in the middle of the ocean. There's no big cities around us, so there's not even big banks out here. It's all local banks, right? Besides Mari's, you guys are Probably the biggest one. So yeah, we take a very holistic approach with our clients. So when we intake a client, we're doing a discovery call with them. We want to hear, where are you at right now with your credit? Where are you at right now with your financials? Where do you want to go, long term and also short term? Do you have credit issues right now that you need to overcome? So we need to address all that. And essentially what I do is I come up with a solution, a creative game plan on how to get from A to Z, right, where you want to go. It's usually a multi-step process depending on where the client's at, but we're looking to get the clients the right credit mixture. A lot of businesses, what I'm finding out here is they don't have access to credit. They don't understand credit, and so I'm going to be highlighting a lot of that today. So you guys can hopefully have some good takeaways, even if you are not a business owner, on how to improve your credit score. Is that going to help? Cool. All right, so what goes into a FICO score? So you can see right here, 35% is your payment history. So obviously, pay your bills on time, right? That's a no-brainer. 30% is, I can't even read that, but it's basically your ratios. It's your credit usage. Okay, very, very important. The big takeaway for today, keep your credit cards at 30% or less of the limit that you have. So meaning if you have a $10,000 credit card, do not spend over $3,000. Or if you do, you can pay it off 1 week before the due date and it won't show up on your credit for that dollar amount. 10% is new credit, meaning you're applying for new credit. So if you have a lot of new accounts, it's going to bring your score down, right? Temporarily. 15% is your credit length history. Do not close your accounts down, ever. Keep them open, especially the ones that you have for a long time. Like if you were a teenager and it was your first credit card, keep that thing around for as long as possible, because that'll actually help to raise your credit score. So it looks at the kind of like the longest history that you have, and also the average length of history across all your credit accounts. Right? That's what goes into a FICO score. 10% is also credit mix. Credit mix is basically, you have revolving accounts, which is credit cards, lines of credit, things that you can kind of shuffle money in and out of. And then you have your install accounts. An install account would be auto loan, a personal loan, a mortgage. You want, like the FICO score wants a combination of all. So you might have a student loan, you might have an auto loan, a house, 3 credit cards, and you want to have high limits on your credit cards if possible, over $15,000 cumulative. That would be the goal. If you do all those things, I can pretty much guarantee you're going to be the 720 FICO score or better. You'll qualify for all the best financing programs out there, whether it's for if you're going to go buy a car, a house, or business financing. Most people don't know, most business owners don't even know, that you need good credit to get a business loan. It's not based on your business. So, and especially for the businesses in Hawaii, we're not talking about publicly traded companies and stuff like that. We're talking about the restaurant owner, the jewelry store owner, or somebody like that. It's really based on your FICO score. It's like 90%, 80-90% is based on your FICO score if you're looking for 50,000 up to about 250,000. So how can we help you? We pretty much can do A to Z. So like I said, I started in equipment finance, we do working capital. A very popular program for us right now has been establishing credit lines for business owners. Business credit is a very hot topic right now. Not a lot of people understand it, they don't have it. And what we're able to do is, I'll show you in a later slide, but we go out and establish business credit lines, either through business credit cards or actual lines of credit, so businesses can have the flexibility with their cash flow. Some of the other things that we do is we help to restructure debt. We do invoice factoring and commercial real estate. Invoice factoring is essentially, let's say you're a food manufacturer, you make cakes or something like that, and you got into Whole Foods. Well, Whole Foods is going to give you an order for maybe $100,000, but you have to pay for all the materials up front, and the labor, and the equipment, and all the things that goes into it, right? And so Whole Foods isn't going to pay you until they sell all their stuff, and then they're going to make you wait 60 days after that for you to get paid. So you got to figure out, how am I going to get from here to that 90-day marker out there when Whole Foods is going to pay me? That would be invoice factoring. Go to the next slide. Okay, so the first one is equipment financing. This is pretty straightforward. Any types of assets that you might want to purchase for your business, we can help with. Even as a startup company, it is a little bit harder as a startup company to get qualified because you don't have much track record there. But we can go up to about $250,000 on a one-page application. We get bank statements at most, and it's usually a pretty quick process, maybe a day or two to get approved. This is a term loan, so it's going to be a fixed monthly payment, 2 to 5 years is typical. This reports to the business credit, so you're establishing business credit for yourself, right? You can go to the next slide. Business credit lines. So this is the thing that probably half our clients come to us for right now. So this is probably relevant for everybody in the room right now, even if you're thinking about starting a company, because you can start to take steps towards getting qualified for this. This is the best way, in my opinion, to get funded as a startup. So this is not going to dilute your company or anything like that. It's actually fairly simple to qualify. You just need to understand what the algorithm wants, what the lenders are looking for, and have yourself match up to that, right? This works for most industries. If you're like a consultant versus a startup restaurant, that might favor you a little bit because restaurants are a little bit more risky. So they do take into consideration the industry code that you're coming from. But essentially we can go out and get 0% interest for the first 9 to 18 months. Most of it's about a year. This only reports to the business. It goes under the EIN number. It does establish business credit for most of them. Not all of them will report. But this stays off the personal credit, this is what I kind of harp to all the clients, because most clients, they'll come to us and it's like, well, we used to be a 750 FICO score when I started my business, and then I did all these things, and well, I'm at a 650 now. I got 50 grand in debt, and now we need a loan like tomorrow. They should have came in the beginning, right? But we have to help meet them where they're at. And we'll have to try and get some type of business loan in place to pay stuff down. I'll show you a case study on that later. But you really want to put stuff under the business name so if you're starting a business, you could take out $50,000 on business credit. It's not going to negatively affect your personal credit score at all because it doesn't show up as debt. It shows up only underneath the EIN number. So when you're growing your company and now I need to go buy equipment, now I need another loan because we're doing well, you still have a 750 FICO score, right? And so you can keep financing and keep the train going essentially. So this is good for startups and existing companies. I try and tell my clients you should have a combination of business credit cards and some form of line of credit. This is really here for 2 reasons. Number 1, you should separate your business from your personal. All business expenses can go on a business credit card. You get points. It establishes business credit for you over time. And then it's good for emergencies. So I have clients that the whole balance is on there because they're waiting to get paid on a big job, right? And instead of paying expensive financing, they just use this because they only need to do it for 1 month. And then the other thing is opportunities. So you never know when an opportunity might present itself. There might be somebody who's going out of business and they're having a fire sale and it's 70% off, but I don't have 10 grand right now, so I can't pay for this thing. You just lost out on that opportunity. If you have 10, 20 grand in credit though, you could tap that thing whenever you want, right? You could turn that into cash and just go acquire that opportunity. I know, Abilene, you're in real estate, right? I have guys that use this for real estate. They put it for down payments or earnest money, right? So you can jump on that thing immediately and you're not even using your own money. And it's free for the first year. So this program is all stated income. So it's no docs, you don't need tax returns, you don't need revenues. You don't need to prove anything really. It goes off what we input into the application, and you can't completely lie on the application, but you can kind of fudge the numbers a bit and kind of finagle the application to help get it approved better, right? There's no upfront fees. You do get points for these as well, usually 1% cash back. There's sign-up bonuses that you can get as well. And then to qualify, you would need a 700 FICO score or better. We try and get clients that have $15,000 of available credit, and then using 30% or less. And what was the last thing I was going to mention? You can go to the next slide. Okay, so invoice factoring, I kind of explained that real quick. So if you got a client, you're in the commercial business, maybe you're a commercial plumber, something like that, you're waiting on a big job to pay, you can actually get 80 to 90% of that money up front as you start the job. And then you'll get the remainder of the money at the end, and the factor will actually receive payment for you, and they'll just take a small fee and pay you the remainder. You can go to the next slide. So we're gonna go some case studies here. So this is a medical facility here in Hawaii that we recently did. This was actually a decline from a local bank that we helped out. They were a 50, some type of nonprofit, I forget exactly how they were structured, but they needed a quick loan because they were running into issues with collecting money from insurance temporarily. So we put a loan together real quick. We kind of had to figure out the best structure for them, so that took a couple of weeks. But once we submitted the application, they were able to get $150,000 in funding within 7 days. Go to the next one. This one was a very interesting one. It's a reef restoration company that uses pet cremations. And so, very oddball deal. The guy was only a third owner, and the other owner, he was trying to buy out at the time. Most of the time when you get financing, you have to have 50-51% ownership in order to sign a deal. Not with the credit card. So we're able to get him $108,000. Even though he was 33% owner, he also had some bankruptcies in the past as well, which I found out later. But we were able to get him working capital for the entire year that he needed to run the business while he was executing this buyout agreement, right? So very flexible there. You can go to the next one. This is a therapy office on Oahu here. So she came to us with a 670 FICO score, and she had a real tough time the last few years, coming out of COVID, family things had happened, business was slow, pretty much living off of credit cards. Her lines of credit were maxed out, and actually getting called at one of the local banks here. And she needed to restructure everything. And so fortunately, she still had a 670 FICO score, and she had a good time in business and everything like that. So we were able to get her, what was it, $120,000 within 7 days again. And we coached her and said, hey, you gotta pay down your personal credit lines, because once you pay down your personal credit lines, your score is gonna boost up. Once your scores goes up, now we have got other options for you, right? We can get the credit lines in place, we can do an SBA, we can do all these different things. This is the first domino. And so we did the deal. 2 weeks ago, she emails me her credit report. She's at a 770 now. Yeah, and she's like, Jason, I also got approved for $270,000. I need help her with that, right? She got an offer because her credit score had gone up. So she told me, yeah, I'm gonna take this deal. It's like 7 years and $270,000. I was like, great, go do that. And then she's gonna come do we have to do her credit lines next because she doesn't have any credit lines anymore because her bank basically like kicked her to the curb. So we're gonna reestablish that for her so she's got the right credit mixture again. So you can go to the next slide, I think that's it. Yeah, so we're really here to help. Like, we love to help with the financing, obviously, but we also have other resources and other people inside of our network that we would love to connect people with. So, if they need help with their accounting, because most of the people we work with, they're small business owners. They're trying to figure things out. They don't have a team. They don't have an HR department. So we're like, okay, well, what do you need? We'll point you in the right direction. And then the way that we kind of do business, we don't get paid till you get paid. So we're all about, working off of success. So 2 things to remember. Number 1, prepare your finances. Make sure that your business and your personal is separate. That is a big takeaway for today. And then keep your personal FICO strong, because that's the main driver in getting approvals, whether you're on the personal side or the business side, really. So that 30% marker, $15,000 in available credit on the personal side, keep your payments on time, and you're good to go. Next slide. So we've got a little bit of extra time, and I always leave time for questions. Usually we got random questions that just kind of pop up, or if you have scenarios that you kind of want to run by us. And then we have a giveaway that we're going to be doing as well, which Okay, we'll do questions first. Questions first. Yeah.
Okay, so going back to the young lady that had the 70 credit score or whatever the case may be, and you told her, your advice to her was to pay down her own personal credit. How, of that, what was her strategy of getting that down versus having that over her head? You know what I mean? Because having a 670 credit score is not necessarily the end of the world or whatever, because you go with it comes to finances with it. How did you help her get past that part in order for her to be approved?
Okay, good question. So, well, I work with a lot of banks locally as well as mainland, but then some of the people that I work with, it's not even banks, it's just lenders. And so it's just about finding the right program. So we got programs, not for everybody, but for a lot of different cases. So one of the programs was able to approve her because she had good bank statements, good cash flow and stuff like that. We can get her 120 grand pretty quick. So I think the approval took like a day. And then we docked the deal, signs off, you got 120 grand. And so once you got the 120 grand in-house, it wasn't the cheapest money out there, right? But it wasn't that bad at the same time. It was a short-term loan to cover that purpose, right? And the purpose was to pay down her credit. So I forget exactly what the number was, but I think she paid down close to like 80, 90 grand on just on personal credit cards. And when you do that, you have that drastic change in your FICO score, right? So her payments were all on time. It was not an issue about that. She didn't have negative history. She just had too much exposure. That was the issue, which is a lot of business owners. Probably 60% of the business owners we see, their main issue is over leverage. It's on the personal. All you gotta do, shift it to the business, you'll be pretty good to go, Hawaii Bank, they're not the most flexible even if you have good credit, but at least I could help you much better if you have it. Yeah, good question. Anybody else?
How do you guys get paid? You said you will only get paid when we succeed.
Good question. So most of the time, well, it depends on the program, really. So sometimes you get paid by the banks or the underwriter, like the lending company, and then other times we have to charge the clients because there's some, like on the business credit cards, like I cannot get paid by Chase. I don't work for them, right? So it's more of a consulting service that we provide, and our thing is, we don't get paid until you get paid. So once you get access to your funds, then you can just pay us out of that on invoice. We just invoice on the back end after you receive the money. So there's not like a true risk to work with us in that case. Anybody else?
So if we say one of those credit lines, we start off with a base amount, and as our income grows in our business, we can reapply and increase that. Is that fairly easy, or?
Yeah. So one of the things with credit is you have to have credit in order to get credit. So you get the credit lines first, you'll probably get more offers after that as well. And most banks will, like let's say you start out with a $20,000 credit line and you prove that you're paying that on time. Maybe you go up to $10,000 sometimes, then it goes down, and then it's $15,000, and it goes down. They'll increase your credit line over time, maybe up to $50K, and I've even seen up to $100,000 on their business credit cards. But some people choose to take advantage of all the incentives that are out there, and they're like, well, I don't want this old one. That's great, but like, I got a new purchase that I got to do. I want the 0%. So then, they'll apply for a new one instead. But yeah, like if you show that you're responsible with credit, especially on the business side, over time, the banks will usually increase your limits or give you other offers.
Okay.
Anybody else? Please go in the back.
First off, thank you very much for your presentation. It's very intriguing and trying to find money where we don't have money. They always say use other people's money. Don't use other people's money. Can you go over in regards to some of the basics for business entities? We talk about personal versus your business. Put more money on your business side. Talking about C Corp, S Corp, LLC partnerships. Can you go just a little bit about that? How starting that up, and which one would be more advantageous for a person?
Okay, good, very good question. So, to me, So I would lump in partnership and sole proprietor into one category. I'll put it over here. Everything else is a corporation in my world. So, and this is just my opinion, right? But I'm not a CPA or anything like that. But if you're a corporation, you have much better tax advantage and a lot more separation as far as the business and personal goes. So if I were starting a company, I would at least be a single member LLC. You can still report that on your personal tax return. But yeah, S Corp is kind of like the ideal, is what I've heard, depending on your business structure. But for us doing our financing, it really doesn't matter. I actually don't see too many sole proprietors these days, or partnerships. Everybody seems to be an LLC if they're gonna go that route right now. But yeah, at the end of the day, it doesn't really matter all that much to us. Maybe it does something on the tax side, but our main thing is you have to have an EIN. You can't be, uncle down the street and just, I just do cash. That does not work because we can't track that. Nobody can look at that, so you have no credit, right? So credit is very important. I mean, we live in America. That's the reality. We're run on credit. We're at 34, 35 trillion in debt right now. But that's how our country works, right? And so we got to understand the system to know how to work with it. Yeah. Any other questions? We probably got one more and then we'll do the giveaway.
Can you repeat what you said about paying off the amount 1 week before? Is that right?
Yeah.
That's going to improve that's going to help
Yeah,
your
so
credit score?
it's a little trick. So when you look at your credit report, each bank will look at, it's a snapshot, right? And it's literally a snapshot and that stays on for the whole month. Most of the time that snapshot happens on your credit within 5 days of your due date. Everybody's due date is different. Every bank's different. So don't quote me, this is not like universal, but it's generally speaking around that due date. So hypothetically, if you're paying your bills 2 weeks early, and you pay all your stuff off, you'll report 0 debt. And you'll probably be an 800 FICO score. But most people, they pay right on the due date, so sometimes when we pull credit reports, it's like, well no, it's still reporting you got 10 grand on that thing. Because it stays on there for the entire month. It's one snapshot that stays for 1 month, one cycle. And then when the cycle happens again, camera takes a picture, that's what it is for that month, for that particular account, and it stays there. We got a couple more minutes.
Okay, so if my business is growing and I want to expand into multiple locations, how can you help me?
Okay, so if you're spending into multiple locations, there's a lot of different routes to go. I would see what their actual goal was and how much they needed, but also understanding how much equipment is going to be needed for that new location. Are they buying the new location or are they going to rent that? That's another big factor. That could be an opportunity to do like a large SBA loan to wrap everything in. Or if they don't qualify that or they don't want to do that, there's a lot of paperwork headache, they could do equipment financing and we could just get them the 0% business credit cards, a line of credit. I think most business owners here, they should have a mixture of things. It's not one product that's going to work. It's having at least 1 or 2 business credit cards, 1 line of credit that you can rely on, and then you finance your equipment. And if you do that, then you should be pretty good to go because you'll have flexibility to keep going to different lenders to get capital. Most banks don't want to approve one company for $500,000. They want to spread the risk out. So it's better to work with multiple banks and have multiple relationships with lenders instead of one big one.
That's great. I think we have a giveaway. Yeah?
Okay, so now my question for you guys is what was your biggest takeaway in the realm of credit that you're gonna bring home with you? First one to raise your hand. Yes.
Gotta get the answer right.
Yeah.
Your credit card is 30%?
Yes.
30%.
30%.
All right, so after we have one more presentation, and then you can ask further questions. But thanks again for Jason Lizel for sharing and just being here today. Appreciate you guys. Good job, good work.
Thank you.